Hi friends, the option strategy that I am going to talk about in this video require 20 to 25 lakh rupees for implementation as well as for an adjustment, and I will explain it also why. But if you are willing to make this strategy with a small fund also, that can also be possible, but you may end up making losses with a small fund. So before implementing with your own real money in it, do your own analysis. And as for me, I implemented this strategy most of the time and I also make profit out of it. Talking about the profit, this strategy and this adjustment give you insane returns. And if things do not go according to your analysis, you still end up with small to zero losses. So without any further detail, let's move on to our option strategy. So this is how our payload chart of this option strategy looks like. I know. There are many books and YouTubers and internet. You must have seen this strategy, right? Well, this strategy itself is very simple and used in a bigger range bond market. But what more important in this strategy is its adjustment. So watch the video till the end, otherwise you will not get it how it works. How to make this option strategy? So let's understand this option strategy within an example. In this example, I am going to take a directional move portion of Banknifty chart in which we can understand how to do the adjustment. Since this option strategy is for range bound market, but with the help of this adjustment, we are going to amplify our profits, and we can make this strategy or convert this strategy into a range bound strategy to a directional strategy. So let's understand how this strategy and our adjustment are going to work into this portion of Bank Nifty. This is the portion we are going to take into this example, and we are going to backtest this strategy into option simulator. And the portion I am actually took from Back Nifty is from 27th March 2023 to 28th April 2023. So this is 1 month expiry, and I already entered the all details and expiry date into the options simulator. In this option simulator, we are going to backtest it. Earlier, I already showed you how the payload chart of this strategy looks like. And in that payload chart, also you can see the how much margin or how much fund you need to require to make the strategy itself. Right now, I'm going to show you how you are going to make this strategy. There are few points that you need to keep in the mind while making this strategy. First point that you need to keep in mind while making the strategy, that is, whenever you are going to sell put side or call side options, you need to select delta of that strike price around 8. Okay, in this case you can clearly see the strike price of 37,600 has a delta of 8. So I am going to sell 20 lots from 37,600 put. Let's move on to the call side, and in this call side you can see there is no 8 delta available, so I am going to select 6.64 delta strike price of 43,000, and I am going to get premium of only 43.7. So if you are thinking that I could actually select 11 delta, what is the harm with selecting 11 delta, and we can actually get more premium of 78 rupees in this strike price of 42,500. The reason behind it why I didn't selected 11.04 delta is because there are chances the market will go up, and when the market goes up, we do not know how much it will go up, right? Obviously, if you are watching the price action and charts, you always know that there are resistance and support level on those zones, but we do not know that those resistance and support level are going to hold it or not. So I actually selling from as far as possible in order to avoid that condition that market goes above the selling strike prices. To avoid that loss, I am selecting the strike prices of 8 or below. So this is how our payload chart will look like when I sold 20 lots on both sides, right? I'm going to buy 2 lots at the money. So I'm buying 2 lots. And here is the
Yeah.
chart of the strategy which I actually showed you in the beginning, and I am actually getting the maximum profit of 1,48,612 rupees. So I got a very huge range, as well as at the end of those range I can actually get a very huge profit also. And in the middle I actually do not get any much of the profit. So this is how our strategy looks like. And moving on further with the adjustment, I am going to share you the rules and regulations of those adjustment, what you need to do when the market do a particular kind of movement, and I'm going to discuss all those rules as we move on with our strategy. Let me introduce our first rule, and that is whenever the premium drops and there is insignificant premiums left into sell positions, we are going to square up those sell position and add another position around 0.08 delta, as well as add two lot buy position of call and put at the money. Keeping in mind this rule, let's move on to our next state in the simulation. Almost there is no premium decay. Okay, moving to our next day. As you can see, there is a premium decay and the premiums are around 35 rupees in both the call and put positions. You can square off it, but I will wait for one more day for the decay, because there is still little bit decay which we can see, as the market is actually not moving anywhere. So I will wait. Now there is a very little bit of premium left. It's around 24 rupees and 27 rupees. So I'm going to basically square off both the position, and I'm going to add both new positions around zero point 0.08 delta, as well as I'm going to add put and call position in buy side also with the two lots. So let's book the profit. This is at the money prices 41,200. I'm adding two lots at the money. You can identify at the money by saying the delta, which is 50. If you are aware of the option chain, you know that the delta around at the money is around 50. If you are not aware, then you can see my video in the description below for the option chain. Now our payload chart after adjustment look like this. As you can see, we still got profit at the edges around 1,68,000, and right now I'm running profit 31,815. Even though we can see that at the time of expiry our profit in the middle is very low. Earlier you have seen that our profit is actually in minus around 134 or 37 rupees, but now you can see our profit is around 8,350 rupees in the middle. Moving on further, as you can see that there is a decay in both the side of the premiums. Now it is a clear indication that market is actually dropping. As you can see, the premiums in a put side is actually gone to 35.8 rupees, and the premiums in the call side are actually gone up, which shows that the market is actually moving upside. So in this case, actually I am going to do adjustment. I am going to square up this put position, which is 35, and I'm going to add one more position 8 delta, and the premium is 55 rupees. So I'm going to add this position, sell it, and now I'm going to add put buy on both the positions, two lots. Now our strategy actually look like this. As you can see, our loss in the middle is actually gone up. In our previous case, we are getting actually 8,000 rupees profit. Now it is getting minus 11,000 or 10,000 rupees loss. Now it's time for our second rule. Our second rule is square up the oldest position as per the movement of the market, Banknifty in this case, or you can just see that which sell position you are squaring off. According to that, we can square off our buy position also. In this case, as we can see, that I actually square off the put position and added the put position in a sell side. So that means the market is actually going up. As I previously told you, I am going to square off the put position in a buy side also, because I do not want the loss to accumulate. You can also usually see that the put position is actually giving us a loss. You can see right now I'm making 41,287 rupees. Now, previously in the middle, we saw that there is a loss of 11,000 rupees. Right now, I can see that my loss is maximum around 2,475 rupees only. So, because we actually square up this position, now my loss actually gone down. So, this second rule is now applicable on all the adjustment from here on. Let's go to the next date. Now, the market is actually gone up from the previous position, and I can actually see that there is a decay in the premiums on a put side also. I am not squaring off any position right now. I will wait one more day because there is still a premium left into this. Okay, there is a huge movement in the market and our premiums actually dropped from 41 rupees to 26 rupees, which is very huge. So I am going to square up this position because there is very insignificant premium left into the market. 26. Going to add another position around 8 delta. I'm getting premium of 50 rupees and the strike price is 40,300. I'm adding 20 lots again on sell side, buying 2 lots, add the money on call side and put side. Since the market actually moved up and our premium goes down, and actually I already got a put sell position also, which indicate there is a increment in the market Banknifty. So I am going to square off put buy positions, which is the oldest one available to me in this strategy. So here is our oldest one, which is giving us a loss of 18,852 rupees. I'm going to square off this position, and as you can see 41,200. Right now 133 is our current price. I'm going to square off it 133. Okay. After our adjustment, as you can see, there is no loss available to us even in the middle, and there is a huge profit available to us in the one side, which is gone up to 2 lakh rupees 9,000, which is very huge profit compared to how much fund we are actually using in here. Let's move on to our next date. Market actually moved up and our premiums left is around 30 rupees only. I am going to square off this position again. Going to add another position around 8.75 delta of strike price 40,800 with a premium of 49 rupees. 20 lots, sell. Going to buy 2 lots in both the side. As well as I'm going to square off the positions of put buy. This is the position 41,500, 41,500. 114 is the current premium of this strike price. Now our strategy look like this, and in my expiry there is still time left. I'm around 18 April and our expiry is 27 April. There is still around. Market actually came back in little bit. Let's see our premiums. There is not much any decay in the premiums. Next day, okay, the market is basically at the same positions right now. There is not any movement. Little bit came down from our previous positions, and you can see there is a decay into put side, and our premiums are around only 30 rupees are left. So there is not much decay left into put side. So we are going to square up the position. So before squaring of this position, let me introduce you one more rule that you need to keep into the mind, and which is very important rule also. As you can see, the market movement is actually in the downside. If we go to the previous day, you can see our future price is around 42,357 rupees and our spot price is 42,239. In our current day, we can see that the price has actually gone down. As you can see, there is a decay in the put side. If we are going to square up the put position, that means the market is actually going up. But in actuality, the market is actually gone down a little bit and there is a decay in the premiums. What our third rule says is, if the movement of the market and the decay in square of position, either it is in call sell or put sell happens, then square of the opposite buying position. So according to our rule, we are going to square up call buy position, not put buy position in this case. Let's square up this position around 30 rupees. Add put sell positions. I'm going to buy two lots. Same, everything is same. And what I'm now going to do is the oldest put position in the strategy. I am going to square up the call buy positions, the oldest call buy positions in the strategy. That is 40,600 strike price call. Now you can see that I'm actually making a very huge profit now in the middle. If you compare with the older payout chart when we started, I am right now making a huge profit in the middle, which is around 76,500 rupees. So now there is only 1 week left in our expiry. The premium which I am going to get at 8 delta is very less now. So I have to hold my sell positions little longer compared to earlier positions. So moving on further with our next day, as you can see the market is actually moving up again and our premiums are dropped to 22 or you can say 23 rupees. So I am going to square off these positions again. The movement of the Banknifty and the premium which actually decayed in a put side represent there is alignment in both the situation. So I am not going to square up the call positions. In this case, I am going to square up the put positions as our market is actually moving up. As you can see, our premiums are actually dropped to 31.8 rupees. Now I have to hold a little bit longer with the premiums. Going to buy two lots in both the direction. 42,200. The put is right now around 216 rupees. So I'm going to square off this position. Now you can see what are the result of our adjustment. As you can see that market is actually continuously moving up. With our every adjustment, our break-even point into the call side is actually moving up also. When you compare this payload chart with your initial payload chart, you will come to know the difference. If we move even further, the difference would be very clear. So let's move on to our next day. I already sold a put option of 20 lots at the strike price of 41,400 and this is the premiums. Same goes for call buy option. I already bought two lots on each side as well as I squared off this put option as per our rule number 2. Now moving on further with our next day. As you can see the premiums are very low, so I am going to square off this position and follow the rule number 2. Video piece. Sold 20 lots at the strike price of 41,800. Now going to add 2 lot buying on each side. I'm going to take this premiums. After the adjustment, we can see our payoff chart. It almost look like this. Moving on further with our next day. There is not much premium left in put set. It is around 15 rupees only. But I am still going to hold at this position because when you see the option chain, there is not a much premium at 8 delta. It's around only 19 rupees and this is 15 rupees. So I am not going to do any kind of adjustment and I am holding this position for next day. As the market has moved out, as we can see from our put sell positions, it has gone around 3 premiums only. So I'm going to square up this position and going to add another positions. This is the last day changes, so I'm not going very close to the at the money. So that is the reason I'm taking 6 delta premiums only. That's by both side. Okay, this is a final adjustment. This is our expiry day itself, so there is no much need to do any close adjustment. And this is how a payoff chart look like. As you can see, it is almost turning to one-sided. Let's go to our 330 directly. Okay, as you can see, this is our 330 time and we are almost making profit of 1,84,000, which is very good. As well as our payoff chart look like this. If we have done one more adjustment, then this payoff chart will be one directional itself. So as you can see that this is the reason why I am actually buying our call positions and doing a lot of adjustment in this strategy, because we are adjusting according to the movement of market and in this case bank nifty. So in one direction, when the market is moving right now, is going up, and at that time we are not going to get any kind of loss in the strategy. As you can see, I am making a very good returns with the amount of money I am putting in the strategy. And there is one more reason why I am actually asking for you to have a 20 to 25 lakh rupees, so you can do all this adjustment without any issue of fund. If you do not have a fund and you do adjustment, try to buy the premiums which are low and try to do manipulation in that. There are very high chances that you are going to make loss. At some point you are unable to do any kind of adjustment, so this is a premium you have to take to get good returns. So this is the whole strategy. This strategy actually I applied in a trending market, but we can actually apply this strategy into a sideways market also, because this is a basically a sideways market strategy. And since this video is already very long, so I'm not going to discuss sideways market also, but I'm going to make another video that will be part 2 in the video, in which I am going to show you how you are going to adjust in the sideways market. The same rules and regulations are going to be implemented in that adjustment also. So we are not doing any changes, but I still am going to make one another video in which I am showing you what kind of return you will going to get you are when you are doing this adjustment in sideways market. This is it for now. Stay tuned for more such videos. Thank you.